stocks have had a volatile year. There's, of course, been tariffs, geopolitical events. And with me is the New York Stock Exchange's Michael Reinking, senior market strategist, to maybe make sense of all this for us. Michael, welcome. And just talk about the economic outlook, all this ongoing financial uncertainty that we've seen this year with tariff talks. How do you see things right now?
Hi, absolutely. Thanks for having me on, Jane. Look, so I think, you have to kind of level set to start, right? So we had come into the year with the S&P 500 up over 25% or over 20% in back-to-back years for the first time, kind of since the 1990s, right? And there was quite a bit of optimism as we had kind of a new administration that seemed to be focused on kind of pro-business and kind of a deregulatory environment. I think markets had gotten the sequencing coming from the administration a little bit wrong, right? As there was the initial, focus on some cost cutting, border security, and then trade policies where markets were kind of using kind of Trump 1.0 as a guide. Now that those trade policies kind of clearly came out of the gate much more aggressive, I think, than markets had expected. We've seen quite a bit of volatility kind of into that April time period, and then we've since kind of seen some of that volatility subside and markets have rebounded. From an economic perspective, there was a bit of a pull forward of demand in Q4 and Q1, kind of with the expectations for those price increases. Now we're kind of stuck in this period. We've talked about it as purgatory, kind of a little, as we have a little bit of a policy fog where we don't know where policy will ultimately end up, causing businesses to kind of sit on their hands a little bit, kind of slow down hiring, kind of work through some inventory. But if we do start to see the end of kind of these trade negotiations in the month of July, right, and those kind of tariff rates are closer to where kind of markets are expecting, kind of in the low teens, I do think that sets us up, kind of for a shift into that pro-growth agenda from the administration, and will help markets kind of in the back half of the year.
Okay, very interesting. Now, there have been some high-profile IPOs this year. We've had Circle and Voyager and really big, well-known companies that seems to have picked up. Is that how you're seeing it as well, the IPO market?
Yeah, absolutely. Right. So we started to see the green shoots of that in Q4 of last year, and those companies had traded really well in the kind of the secondary market. Now that volatility we talked about, in the Q1 timeframe, I think pushed out some of the pipeline a little bit. But as you mentioned, we've seen, kind of quite a bit of a pickup as volatility has started to subside. We've had some really high profile companies, kind of coming to market, and those companies have, not only been able to raise capital, they're upsizing those deals, they're pricing at the upper end of or through kind of the initial ranges, which means they're able to raise more capital to invest back into their companies, right? And from an investor perspective, right, we're seeing kind of quite a bit of demand, kind of from the investment community for these new opportunities, right? Those stocks have traded very well in the kind of secondary market, right? Which sets us up for kind of an increase of activity. Especially kind of in the end of kind of Q3 into Q4, we'll probably see a little bit of a slowdown in the seasonal, kind of summer slowdown, in the next couple of months. But I do expect to see kind of a very strong pipeline of companies coming in the next, at the end of this year.
And of course, the Federal Reserve, always a major factor in the markets. And there's been a lot of pressure, I feel like, on the Fed to cut rates. How do you see the Fed's actions for the rest of the year?
Yeah, so it's a very interesting dynamic, right, where you have President Trump clearly expressing his displeasure with the fact that the Federal Reserve has not been cutting rates. Look, they're in a very difficult spot where kind of Washington policy puts their dual mandate of maximum employment and price stability at odds with itself, right? Potentially kind of increasing that in the inflationary impacts. Look, I think the Federal Reserve has told you that they see the economy in a good spot, and they feel like monetary policy is also in a good place, allowing them to be patient in terms of moving, and they're going to want to see kind of the impact of tariffs on the economy in the coming months. That puts us in a little bit of a difficult scenario. Last week we had seen kind of the inflation figures coming in better than expected, so we could start to see the messaging begin to shift kind of from the Federal Reserve, suggesting we could see cuts kind of in kind of the end of Q3 or kind of the fall. Should the data, that'll be qualified, should the data continue to move, kind of in the right direction, the recent, kind of increase in the conflict in the Middle East, does throw a little bit of a monkey wrench into that, kind of inflation dynamic, though.
Yeah. Well, let's talk about NYSE Texas real quick. So, of course, that big announcement just recently made. What drove that decision to set up a stock exchange in Texas?
Yeah, so, very exciting development for the New York Stock Exchange. So NYSE Texas is the first exchange incorporated in the state of Texas. And when you think of the New York Stock Exchange, we already have very deep roots and relationships, kind of in the Lone Star State, right? Texas has the most NYSE listed companies in the country, making up nearly $4 trillion of market capitalization, right? And, the Texas economy and population growth, right, have made it all the more important kind of for the U.S. economy. It's become a hub for not only energy, but technology, right? And kind of financial markets, right? And, much of that is a testament to, the pro-business jurisdiction that's been set up by Governor Abbott, right? He's talked about wanting to have a local capital markets ecosystem, and NYSE Texas is the first building block in achieving that.
Yeah. And then finally, what would this mean for Texas companies, and would companies outside of Texas be able to list at the NYSE Texas?
Yeah, absolutely. Right. So, NYSE Texas, we'll have our headquarters there. It will be a fully electronic exchange, allowing companies to dual list and then have another trading venue, taking advantage of our best in class technology. From a business perspective, the NYSE is very much focused on our NYSE community of companies, this great list of companies around the globe, right? This allows those companies, to also show their support for that pro-business jurisdiction that I just talked about, and potentially take advantage of any incentives that the state offers, for listing in Texas.
Okay, Michael, thank you so much. Always great to talk to you.
Thanks for having me. Talk to you again soon.
Thanks.